Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Alan, thank you for joining us. And you're looking at Intel, right?
Yeah, I'm looking at a stock that hasn't participated in this bounce from the bottom. You've seen tech come back. We're still 25% off the highs if you look at the NDX from last year, whereas the S&P is right at a critical point that Ben was talking about to see if we can push above 4,200. But I think Intel is bad enough to buy, and I really like the chart pattern that we're seeing here. It's trading between 25 and 30 for the last 5 months. A breakout of that range targets 35.
I like that you said it's bad enough to buy, right? So what are some other levels, in addition to what you just said, that people can keep an eye out for in the interim?
Well, what I'm looking at are a couple of things. So I've got an indicator that measures leverage buying, and they're seeing a lot of bull buying here at these levels with this bottom in place. And I also see bullish divergence in the fact that it made new lows, but not new highs in implied volatility. Now, that's sometimes a sign that the sellers have run out of strength and that you could see a reversal and some profit taking and to feed this higher. Now, to take advantage of that, I use in-the-money options. I use a stock substitution strategy where I'm buying it deep in the money call that's going to act like the stock. If you wanted to buy 100 shares of Intel at $28 here, it's going to cost $2,800. If you buy one option, the in the money option I'm looking at is the July 25 call. It's got 5 months of time, gives you the right to be long from 25, and again, that's a 5-year plus low. And that option's trading for about $4.50 right now, and it's $3 in the money. So it's a math play as well. It's about probability, having the right to be long, having time for this to develop, and take advantage of the fact that this stock is 45% off its 2022 top, like I said, whereas the Nasdaq's only 25% off. And if you compare it to the SOX index, the semiconductor index, that index is up 20% in 2023, but Intel's only up 5%. So there's a lot of catching up to do with this stock.
You're absolutely right. And so one of the things we've been tracking here is just the difference in chip stocks. You know, those that are tied to automobile manufacturing, they're doing quite well. But those tied to computers, PCs, maybe even cell phones, they're a little bit more volatile. So what's just your overall thought of that split, that divergence we've seen happening so far?
Well, I'm strictly a technical trader. I'm not about the why. I'm about how a stock is going to move. And I love what I see here, the fact that it's coiling between 25 and 30, building energy for a breakout. And it's been doing that for 5 months, making this bottom base. So it's like a coiled spring that's built up energy that when it does break out, we'll see a big bounce. And now, just a modest move to 35, this option gains 100%. So it's about math, it's about probability, it's about staying power. And most importantly, it's about limited risk. This gives me the right to be long from 25, which is, like I said, $3 and some in the money right now, and this option costs $400. So that's how I like to play.
All right, Alan Nuckman, thank you so much for joining us. He's Chief Market Strategist at BullseyeOption.com. Now, coming up, more and more Super Bowl ad spending might be pushing to TikTok. Now, we'll find out what trends stood out from this year's big game. Plenty more Morning Trade Live still ahead. Next up on the TD Ameritrade Network.